While the Nasdaq is barely down 3% year to date, many stocks are down 10, 15, 20, 30, 40, even 50% from their all-time high. Many investors are down a lot on those stocks. A lot of investors are doubtful, they're feeling some pain. But what makes it even worse is all the bearish content on X, such as this one that's claiming that insiders are selling and things are going to get much, much worse. And it says 100% sell, no buy, without taking into consideration that most insiders get their compensation through stock. So they're always pretty much net sellers of the stock. And I'm just seeing a lot of fear, a lot of exaggerated fear, I should say, in general. But Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. I'm seeing a lot of fear in the market. And I personally believe the stock market sell-off is likely nearing its final stages. And I'm not someone that's a perma bull and talk about how the market is going to go up all the time. In fact, I made a market crash video 4 weeks ago before it was fashionable to make bearish content. And I'm starting to get the opposite side of the trade. And I'm going to tell you why. Now, what really makes a lot of investors frustrated is the fact that the Nasdaq is not even down 3% on the year. And that's why people make fun of me when I say a stock market crash. They say, what a kind of crash, man? We're still at all-time high. But many stocks, the big seven guys, they're down 20, 30% from their high. And that normally happens when the Nasdaq is down 20 or 30%. But this time we have quite a unique situation. And it's worth understanding why this is happening to be able to position correctly for the second half of 2026. Now, many people believe it's happening due to the war, and the war is the one that's causing the crash. This is not true. The sell-off in the big seven and the tech stocks has started way before the war has even happened and before anything has happened. But if you look at the history of conflicts on the S&P 500, most conflicts have surprisingly been bullish for the market. I know it sounds crazy and it doesn't sound logical, but investing, again, is not much about logic. It's about expectations, and maybe wars bring expectations of more liquidity and the market likes it. But generally speaking, most wars in general, most of the time, they're kind of bullish for the market. They're not really bearish for the market. Now, the reason why I'm saying we're nearing the end of the stock market sell-off or the rotation out of the big seven and the tech stocks in general is most stock market pullbacks, and I've seen many of them, they tend to happen in the same exact fashion. It starts with one stock, one of the leaders, one of the big seven, one of the big 10 mainly. It starts to weaken. And it started with Microsoft back in July of 2025. Microsoft started to get weak while other stocks have kind of held up a little bit. And eventually Microsoft gave in. After Microsoft, Meta, as you could see, here started getting weak. It was acting strong a little bit, and it eventually joined Microsoft on the way down. After Meta, it was Amazon here in the green. Amazon, as you could see, was really strong, was pretty much flat all the time, and it was showing a lot of strength. But eventually Amazon met them on the way down, and very recently Nvidia has joined them on the way down. And Jeremy Grantham calls it shooting the generals. So the first general falls, and then the second one follows the first one, and the third one follows the first and second, and they pretty much follow each other's down until they meet each other's on the way down. That's really important to understand. But what's really surprising is that the S&P 500 has been flat throughout this period. And this is a unique situation and is confusing a lot of people. Now, the reason why the S&P is flat is due to the unprecedented rotation in a lot of the safety-related stocks. And I've seen many rotations, but this is the most extreme rotation I have seen over the last 10 or 12 years, you could say. And Verizon is up 24% year to date. AT&T is up 15%, Altria 19%, Duke Energy, Coca-Cola, all of them are doing extremely, extremely well. Now, this to me kind of looks like a classic sell-off where it starts with the generals. Those generals, they follow each other and they go down. Once they meet at the bottom, those stocks that the money was going into, they eventually start going down to meet the generals. And once they start going down, that tends to mark the end of the stock market sell-off. And if we look at some price action over the last few days, Coca-Cola has started to show some weakness. Procter & Gamble, Franco-Nevada, and Gold and Silver, which were flight to safety, they started to join the S&P 500 on the way down. Now, 1 or 2 days is not enough, but if that persists, and it looks like it's going to persist, it's telling me that we could potentially be nearing the end of this stock market drawdown or the stock market sell-off. And another indicator that tells me that is the short interest on the tech stocks or XLK ETF. It's the highest ever, and this has preceded with stock market bottoms, or mainly a bottom in tech. You could see it here in 2024. It kind of marked a bottom. Same thing in previous period. Once it spikes in a major way, it tends to mark a bottom. And I believe that could also be the case this time in March of 2026. Now, no one really knows why the market's going down. We can make all kind of assumptions, but I personally believe I likely have the right assumption. And my assumption and my theory is that it's going down due to Kevin Warsh, but it's not Kevin Warsh, due to the uncertainty around the new Fed chairman. And the market started to price it in from pretty much July of 2025 with Microsoft, and all those stocks followed down while the money went into Verizon. Now, Kevin Warsh is well known for being for interest rate cuts. So he wants to cut interest rates, but he's against quantitative easing. He's against, you could say, printing money while cutting interest rates. He believes you could do either or, but you can't really do it together. That's a big problem for growth stocks, for tech stocks, and for risk assets like Bitcoin, because Bitcoin over time follows the money supply. And when the Fed does QE, it expands the balance sheet, it expands money supply, which is bullish for Bitcoin, for tech stocks. And the algorithms, they pretty much sell them together and they buy them together, which is why they sold the tech stocks and they bought dying Coca-Cola and Procter & Gamble and all these kind of stocks. Now, I personally believe that the market got it wrong. And Kevin Warsh is not going to be as hawkish or as bearish as a lot of people believe, because I don't believe the economy can actually take it. We're starting to see some stress on the economy, even in private credit. But despite us having inflation above the 2% target for the Fed is still doing QE. They're still injecting $15 to $16 billion every single week into the economy. This is not because everything is going well. This is because there's some cracks in the system and there's some things that are not going too well. So I highly doubt Kevin Warsh is going to come in and he's going to start to reduce the balance sheet like the market is pricing in. And if the market wasn't pricing it in, I don't think we would have seen such a massive divergence between the tech stocks and a lot of the, you could say, dividend stocks and flight to safety and high free cash flow yielding stocks in general. Now, if I'm right on this assumption, and the market realizes that once we start getting the hearing of the new Fed chairman and the nomination in Congress, and he starts talking a little bit more, I think we could bottom on this news, especially in the tech stocks. And I think there will be a massive unprecedented rotation from those Coca-Colas and Procter & Gamble back into Amazon, back into Microsoft, back into all the tech stocks that have sold off. And that's how I'm personally positioned into the second half. I'm starting to buy the dip on a lot of the big seven. I haven't owned a lot of them. I only had one. This year I have 3 of them, and I've been buying the dip, and I believe I'm likely going to be right on this assumption. Now, I did tell you that I believe we're likely nearing the end of the sell-off, but I don't think we're at some kind of an absolute bottom. And there's a few indicators that are, you could say, telling me that. One of them is the VIX, or the volatility index. Most market crashes or major pullbacks tend to bottom with the VIX above 40. This is when we bottomed on tariffs, we went up to 60, but above 40, it was kind of a good time to buy, you could say. Same thing with the deep sea kind of sell-off in 2024. Same thing with COVID, we went above 40. Same thing with GFC, Great Financial Crisis, and same thing with the dot-com bust. We bottomed a little bit above 40, and then it was a generational buying opportunity. Now we got up to 28. 28 is not bad. We're almost getting there, which again, we could get to 40 in a day, 2 days, 3 days. So I personally believe there's not much downside left on the NASDAQ and the S&P 500. I told you guys, if I had to guess, it would be like maybe 8%, 7% on the downside. And I think it could potentially happen very, very quickly. And I'm not really concerned about that, because the second half is we have the midterm elections. And I'm sure most of you guys can kind of guess the outcome of those midterm elections based on a lot of polls and a lot of predictions and a lot of things that are happening right now. So I highly doubt they want a stock market that's crashing into the midterms. So if I had to guess, I don't believe this kind of sell-off is going to last more than 1 to 2 months. The Fed Chair Jerome Powell, his term ends in May. I think this is when it could potentially bottom. We're kind of pricing it in within the rotation out of tech. And that's my explanation of the sell-off and what's really happening in the market. That's how I'm positioned. I'm buying more of the big seven, and I still have a decent cash position and some puts on QQQ, which I could potentially take profits on very soon. But I believe we're likely nearing the end. I don't believe it's going to be as bad as people are claiming it's going to be 30 or 50% pullback. And you have to try to be greedy when others are fearful. This is what Warren Buffett says, and this is what I try to do. And that was just my opinion on the market. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.